Hi everyone, welcome to JXG Spotlight. I'm Gamika De Silva, your host. Today we have lined up a very interesting discussion. Today we are going to dive into economics beyond Sri Lanka. Last time we spoke about budgets and economics was the budget analysis we did with Dimantha Matthew. If you have not looked at that video, go to our channel and you can look at the video. If you like our content, please subscribe to our channel. So, couple of days ago, the world was buzzing about a taxation implemented by US government, Mr. Donald Trump. And even if we speak, even last night, the news feed was filled with the retaliation, what people think about it, different interpretations, etc. So I thought we will invite this interesting personality to our discussion because usually his discussion, and this is a passionate subject for him. I usually have my corridor discussions with him about economics. I learn a lot. Then I thought, wow, this is the guy who should come and talk to us about it. So, to introduce my guest today, he holds two master's degrees in economics. That says about it, and bachelor's in trade, international business relations. He's also a triple accountant, and he's my good friend, our Group Chief Financial Officer at Janashakthi Group, Mr. Thanushka Jayasundera. Thanushka, welcome to JXG Spotlight.
Thank you very much for having me, Gamik.
Right. Thanushka, this is a pet subject of yours, and we have had our offline discussions as well. So I want you to share your knowledge, opinion, and analyze this whole drama about, I would call it a drama, about this taxation around the world and how it impacts the entire world economics and the countries as well. To start with, I was wondering when I initially saw the news, did Donald Trump wake up suddenly and realize, so I should do something impactful, let me impose a tax around the world? How did this all happen? What was that whole rationale thinking behind the whole story?
I think no. The straightforward answer is no. He did not wake up and think, okay, I don't like these countries and I'm going to tax them. I think there is a fundamental correction that needs to take place within the US economy itself. US economy has been running what you call a twin deficit for a long time period. What we mean by a twin deficit is a significant fiscal deficit where the government revenue is much smaller than the government expenditure. That's what we call a fiscal deficit. And the other thing other thing what they've been running is what you call a trade deficit, where the exports are much smaller than the imports. And they were able to do this because there was something that happened about 50 years ago in 1971. So up until 1971, the world operated on a fixed exchange regime to a greater extent. We used to call it the Bretton Woods system, where gold was the reserve of the entire world, and United States issued US dollars on the back of your gold, having gold as a reserve on the strength of gold.
Right.
And they had a fixed exchange rate against gold. We had priced it at $35 per ounce of gold.
Right. Okay.
So based on if you have only 1 ounce of gold, US could issue only $1.
Right.
If you have multiple ounces of gold, then they could issue dollars. And on the back of that, all the other countries issued their own currencies based on the amount of dollars that they had. Why? If let's say I am Sri Lanka and you're United States, if I have exported more goods to you and I have imported less goods from you, and the balance of that is, let's say, $35 for that particular month, that means my gold reserve would increase by 1 ounce. So, but I would not actually collect gold, I would hold on to dollars because transporting gold is not the easiest thing, so you would have dollars in as a reserve. So, we used to do transactions among the world based on that system. We call it the Bretton Woods system. Okay. But what this did over a time period running up to 1971 was that US started running a trade deficit. If you study statistics, by 1950 US had a trade surplus and a very small fiscal deficit.
Okay.
Right? But by the time it came to 1971, US was running a trade deficit and a larger fiscal deficit. Trade deficit and a larger fiscal deficit as well. So there was a significant outflow of gold from US.
Right.
And as a result, the president, Richard Nixon, he was the president back then, he realized, okay, I can't manage this. My gold outflow is too much. And he made an announcement saying, US dollar will no longer be backed by
The gold.
gold.
Yeah, okay.
So immediately, United States dollar became an independent currency of gold. And they could issue any amount of US dollars as much as they want. To back it up, Richard Nixon, the president of the United States, also struck another deal with Saudi Arabia and other oil exporting countries.
I was going to ask about the fuel part, yeah.
And said, hey, you guys will only sell oil for dollars.
Dollars, yeah.
No other currency. So now, 1971, oil was the main commodity of the world. All the countries in the world wanted oil. So now the countries that are selling oil have made a proclamation saying, I'm only going to sell oil for US dollars.
All right.
So which means if Sri Lanka or any other country has a trade surplus against any other country, we had to have dollars.
To buy,
if not, I can't buy fuel, right? So all the countries in the world started doing their international trade in
Based on
US dollars. Yeah. Automatically, US dollar became the reserve currency.
Yeah.
What is a reserve currency? Now, the other question is now that leads into that, what is a reserve currency now? Reserve currency is a currency in which countries save.
Right.
So now, I think you all would have watched news the last couple of days, right? There was a discussion of how much foreign exchange reserves that Sri Lanka has. Sri Lanka had $6.5 billion of reserves.
Yeah.
6.5 billion what?
USD.
There you go. Yeah. So we say all the countries, not just Sri Lanka, all the countries in the world now save in US dollars.
Yeah.
About, if you look at the breakdown of the reserve currency of the world, 55 to 60% of reserves in the world is held in US dollars. About 20 to 25 is about in UR.
Okay.
The balance is split between JPY, GBP, and
okay.
Chinese yuan, right?
But so majority now, focus on USD, so that's...
Right. Yeah. So now what happens is, this gives the United States the right to run twin deficits. What does that mean now? When you have a trade deficit, I import more goods. Let's say I'm United States. I import more goods than I export goods. Yeah. What does that mean? I'm buying this mic from Sri Lanka.
Yeah.
I get the good and I pay in dollars.
Right.
Dollars goes outside. Then we have what you call a trade deficit. Right? Currency has gone outside of my system. But your balance of payment has to balance out. No?
It has to be zero.
It has to be zero. Yeah. Now, for your balance of payment to balance out, if your trade account has a deficit, your capital account has to have a surplus. That's the only way your balance of payments is going to balance out. So now all these other countries in the world are saving in US dollars.
There you go.
So what do? These countries come to United States back via the capital account and invest in US treasury bills and treasury bonds. Yeah. So your balance of payment accounts balances out. This also allows United States government to run a fiscal deficit. Why? All the other countries in the world are willing to lend money to United States.
Yeah, there you go. Yeah.
Right? So this system allowed since 1971 converted the US economy to a very, very consumer-driven economy. So immediately all of a sudden they are in a situation where there are no checks and balances.
Yeah.
Bretton Woods system had a nice set of
some controls
in place. Yeah. Now there are no controls on United States system. What happens when there are no controls? Natural human behavior is to collect wealth, consume as much as possible, and then save next. Yeah. So this led to, within the US system itself, your households are negative wealth. Yeah. You have more loans than your savings. And the government itself ran the same model.
Right.
So over a period of time, US trade deficit ballooned up to a level that is alarming. US fiscal deficit also ballooned up to a level that is alarming. So that has led the President of the United States, Mr. Donald Trump, to have this new department, Dodge or Dog, I don't know if I'm pronouncing it correctly, Department of Government Efficiency. Right? So that is run by Elon Musk up until last week, I think. So they're trying to cut down government expenditure. So they're trying to address the fiscal problem. And on the other side, through the tariffs, they're trying to address the trade problem.
Right.
But the problem with this is a seismic shift.
Yeah. Yeah.
Huge shift. It's difficult to imagine that it will stop there.
Okay.
So that's the background of
this
what
whole story,
happened.
yeah. So, I mean, as you explained, this is not an overnight decision or a gut feel decision, but it was leading from back then, and the trade deficit and the pressure on U.S. economy, etc. So that leads to the next question. I think if my statistics are correct, 438.9 billion USD is the recorded figure, the approximate imports from China to US, and that has grown by about 2.8% in 2023, whereas the exports from US to China is 143 billion, which has declined 2.9% in 2023. So I think China plays a key role on this whole equation. What's your reading on this? I feel there is a, if I term it correct, economic war.
Okay. Let's term it as a trade war.
Trade war, yeah.
So now again you have to go back to history. You have to. It's not something that is happening today. This is a result of what happened in the last 50 years. So when the moment United States moved out of the Bretton Woods system and they started printing currency, other countries realized, hey, I can't run a fixed exchange rate to the United States anymore. Because now there is an unlimited supply of currency from the other side of the world. From my side of the world, I need to devalue my currency.
Right.
So what does devalue my currency does? So Japan, so if you look, countries that has aggressively devalued their currency against US dollar, Japan comes first.
Yep.
China comes second. Vietnam comes third in recent times. Malaysia, Indonesia, all these countries devalue their currency. What does it mean? The moment you devalue your currency, assume I am selling this mug to you, and I am pricing this mug for $1. 100 Sri Lankan rupees. Right? I say, hey Gamika, I want to sell this mug. My cost is 80, my margin is 20. I'm selling this to you for 100 Sri Lankan rupees.
Right.
And the exchange rate between the dollar and LKR is 100 rupees a dollar, which means you can buy one mug per $1.
$1.
But I am going to realize now, hey, US is printing currency. I need to devalue my currency. Otherwise, I can't run this system. I'm going to turn around and say, this mug is 100 rupees still, but the exchange rate per dollar is, I'm giving you 200 rupees per dollar.
Right, okay.
Right?
Okay.
So for you are a US consumer, I am a Sri Lankan manufacturer. For you, all of a sudden, per $1, you can buy two mugs.
Two mugs, yeah.
And I in Sri Lanka gets 200 LKR,
yeah.
right? Yeah. So that's what Japan did back then.
Right, okay.
Japan started it. They started devaluing their currency aggressively. So US started running a significant trade deficit against Japan. And this Japanese model, I don't know whether I'm right to call it the Japanese model, a lot of other countries started following. The entire Chinese economic miracle is on the back of China devaluing their currency and US being able to buy Chinese goods at a cheaper rate. And I think the US had to run a fiscal deficit because they ran into quite a lot of wars. There is no single decade in the last 50 years where US was not involved in a war. And wars are very expensive business. From Vietnam to Afghanistan to they were Middle East, they were everywhere, right? So they had to run a fiscal deficit. And on the trade side, these countries they were acting on their own interests. They wanted their people to have a better future. They wanted their economies to do better. And they realized the only way that I can run an export oriented economy is by devaluing their currency. So these countries started devaluing their currencies aggressively. So that created this trade imbalance, and to a greater extent US was okay with it because the money that they were sending out on account of imports was coming back to them, through the capital account.
Yeah.
But now it has come to a level, it's no longer sustainable. This is my view.
Yeah.
There can be plenty of economists who may disagree and say, hey, no, US is still strong and they can still run this twin deficit for a long period of time. But now, if you look at what's happening the last few days, Vietnam started offering zero tariffs to the United States. European Union followed. I think Peru has followed as of yesterday. But China backtracked.
They backtracked.
China said, hey, I'm going to hit you back with more taxes.
Yeah.
And China didn't stop at that. China said, I'm not only going to hit you back with taxes, I'm only going to stop supplying rare minerals to you. So the entire United States tech business is heavily dependent on rare minerals. China, through the Road and Belt Initiative, started acquiring a lot of mineral fields in African region.
Yeah.
So now China controls a large chunk of these mineral exports to US. So China knows that they need it. So China said, hey, this is my response. And last night, Mr. President of the United States said, I'm going to increase taxes to China to 104%.
104%, yeah. Wow.
And not only that, he said, if I'm reading this correctly, I might be wrong, they said, any ship that is built in China, if they want to dock in United States, you have to pay a fee between $500,000 to $1 million. Any ship that has a subsidiary of shipping country in shipping subsidiary in China has to pay a fee of $500,000 to $1 million. Any ship that has a Chinese-built semiconductor built in it, if they want to dock in United States, has to pay $500,000 to $1 million fee in China. So the trade war is intensifying. But yes, it is trade war. But we have to keep in mind that this system, the economic model that we've operated in the last 50 years, pulled a lot of people out of poverty. From 1971 to 2025, the number of people we've pulled out of poverty in China, India, Sri Lanka, Africa is a sizable number. It's no small feature. Right? In this model that we operate in, there is no you win, I lose, I win, you lose. This model is where we all lose together or we all win together. Yes, it is trade war. It is going to be very interesting to see how we settle the dust on it.
So let's come back to where it matters for Sri Lanka. We sit in a wonderful place in this whole trade economy and positioned well, and we are an important hub in the whole world. How does it impact? I have been hearing a lot of politicians talking about the pluses and minuses, whatever. But how are we impacted out of this? Because I think if my statistics are correct, again, Sri Lanka has almost about 20% in the exports to US. That's costing value about 3 billion USD in 2023. How is this going to impact us, Thanushka?
Okay. Again, there's a little bit of history to that question too, right?
Yeah. I think it builds the context too.
Yes. So since 1971, since we moved out of the Bretton Woods system, US started outsourcing their entire manufacturing to countries where labor is cheap. Sri Lanka is a country where per capita GDP is $4,000. Vietnam per capita GDP is $4,500. China is somewhere between $10,000 to $12,000. US is a per capita GDP is $80,000. Right? So they are 20 times Sri Lanka, 8 times China. So which means if someone wants to manufacture a good or in United States, the cost of manufacturing alone is going to be at least 10 times than manufacturing in China or Sri Lanka or India, right? So to manage that cost of manufacturing, they've outsourced the entire manufacturing process.
Right.
So China is considered the manufacturing hub of the world, all right? And Sri Lanka manufactures apparel because it's cheaper, right? So now we are at a situation where there is a massive trade war taking place between China and United States at 104% tariffs. China just lost their comparative advantage. Right? We do international trade on a theory called comparative advantage of nations by Professor Ricardo. Right? So taxes or tariffs are a hindrance to that theory. The moment you apply 104% tariff to China, China loses that comparative advantage. Goods manufactured in China are no longer cheaper in other
US,
parts of the
other
world.
part of the world.
Right? So I hope Sri Lanka offers 0% taxes to the United States as well. So with Sri Lanka being right in the middle of the world, right? We have west on this side, east on that side, right? We can be a perfect hub, and we have a large literacy rate of 99%, average life expectancy of 75 to 80%, free education, free healthcare, fabulous infrastructure, and beautiful country if expats wants to come and work here.
Absolutely.
Beautiful country with clean air, nice infrastructure, nice beaches. So it's not a bad place. It's one of the best places in the world.
Absolutely.
If you want expats to come and work here, it's one of the best places in the world. So there is an opportunity for Sri Lanka where there are two countries fighting with trade, and I mean, Apple manufactures their phones at Foxconn factories in China, right? So all of a sudden now Apple phones are going to be much more expensive.
As we speak, I think the prices in Sri Lanka has gone up.
Yeah, exactly, right? And there's dual effect on the United States side as well.
Yeah.
So tariffs are going to eat into spending capacity of the US people.
Correct.
So the spending capacity is going to come down. Goods and services of United States inside is going to go up to some extent. So they'll have to bring some parity into it. In economics, you call it equilibrium.
Yeah.
So
The
they
demand and supply.
Demand and
Yeah.
supply, and the companies, manufacturers will look for cheaper hubs. Yes, Sri Lanka do not have the scale and the labor force that China has. We have 21 million people, and China has billion plus people, right? But at least some part of it, I'm sure Sri Lanka can get because of the way that we are positioned.
Yeah.
And to do that, politically, it's very important we maintain our non-aligned stance.
Yeah.
Sri Lanka needs to be the Switzerland of Asia.
Yeah.
In Switzerland, in Europe,
Yeah.
they were non-aligned.
Non-aligned, yeah.
World War One, World War Two.
Yeah.
They said, "Hey, you guys fight it out.
You're
Don't
not-
drag
you're
me
not-
into
you're
this.
not part of this,
You're
yeah.
not part of this, right?" I think Sri Lanka needs to play that, either by design or by pure absolute intellect and geniuses in our political spectrum. Since 1950, we've been non-aligned. I think we need to maintain that stance. We need to be non-aligned, and we need to maintain that non-aligned stance. And we need to leverage on our position. Become Switzerland of Asia, and become. I don't think we can cater to the entire manufacturing hub of the Chinese capacity, but we need to figure out what are the more value-adding goods and services that we can provide. We can move into high-end apparel,
Yeah.
high-end electronic manufacturing, and high-end services wherever we can do. I don't think Sri Lanka is a cheap destination.
Yeah.
Sri Lanka is not cheap. Sri Lanka is a high-end value destination. That's where I think Sri Lanka needs to position ourselves. All credit to the central bank governor. He has built buffers on two ends. One, he has built interest rate buffers.
Yeah.
Our inflation is in negative territory, but our overnight rate is between 7.5 to 8.5 at the moment. That's a significant real rate that we are enjoying. And our exchange rate is hovering between 295 to 300. And central bank collected about $400 million last month. That means before our exchange rate depreciates, either our imports have to increase by $400 million or our exports has to come down by $400 million. So I think we are very stable at the moment.
Right.
We have the buffers to absorb this international shock. Now we need to see how we capitalize on it.
Absolutely.
We must capitalize on it. I think we should look at it as an opportunity. If we capitalize on it, Sri Lanka is going to be the best place to live for the next 20 to 25 years.
Fantastic. I think good to hear and clear that doubt that we Sri Lankans have, because media, certain channels, like a lot of news are coming out, and people are questioning whether we will have any. And this leads up to multiple questions, but I'm race against the time. But I try to slot in few as possible. You mentioned about being a hub, and we have the capacity. I have read and seen, whilst our labor being expensive, I think the intellect capacity is very high. We can contribute. I think many countries will want Sri Lankan brains to come there. And what's your opinion, TJ, on that?
Same thing. I fully agree with you. That's why I said earlier that Sri Lanka is not a cheap destination. If our value proposition needs to be on high-end value, because historically, our core competence has been intellect.
Yeah.
We have not been very, very successful in selling cheap stuff, right? And it's in our culture to aspire to deliver a high quality good or a service. Because you've been, you know very well more than me. In an organization, the most difficult thing to change is culture.
Absolutely.
Right? You can change systems, you can change processes. The cultural change is
That
the
won't happen.
most
It's
difficult
tough, yeah.
thing, right? And Sri Lanka, inherently, our culture is to look for quality stuff. Right? We have these phrases, "Labu badu hilak tina," and so go buy the expensive one because it has higher quality.
Yeah.
Right? So it's in our culture to deliver quality and look for quality. Absolutely. It's ingrained in us. So that is something that we can leverage on it, and that's something we need to price.
Absolutely.
We
Price
have
it properly.
Exactly. We have to price it properly. There was an interview some time back. An Indian professional who positioned the Incredible India tagline to the world.
Okay.
He says Sri Lanka is at least a $600 to $700 a night destination, right? So
we need to know our value.
Yeah. Exactly. I think a lot has to do with we realizing what our value is. Yeah. We need to realize this is the perfect position. And I think the Sri Lankan airline CEO Richard Nuttall at an interview on an airline forum said the same thing. From an air traffic point of view, Sri Lanka has a perfect destination. Absolutely. Because you're right in the middle. Yeah. And we've been discussing that from a freight and sea transport point of view, that we have the perfect destination. Now we have to figure out how do we capitalize on it. How do we... It's no-brainer to say that a lot of manufacturing companies will exit China, no?
Yeah.
A lot of people will exit China because China seems to be one of the few countries now retaliating US.
Yeah.
While most of the other countries have said, okay, fine, we will offer 0% to you. Right? So then those guys who are saying 0% is going to benefit out of this.
Yeah.
Manufacturing will move out of China in this decoupling process. So you have to remain neutral and maintain relationships with both parties to get the maximum out of it while realizing the value of your destination. We have a value proposition that many other countries cannot offer. And we need to price it correctly.
And I think, as the saying goes, you have to look at the glass half full. There's opportunity on every crisis. Sri Lanka can leverage on this. As we are on a tight time schedule, I'll sort into the last two questions, TJ. India, I mean, back of Prime Minister's visit to Sri Lanka, recent visit also, our neighbor, key force in the world trade and economy and the world peace as well. What do you think India's role will be in this whole situation?
That's a that's a googly. So India historically, from a political point of view, India has historically had sort of differences with China, and the business model. Okay, you can't call it business model. The economic model that India is aspiring to do is very similar to what China has done, where you become an export-oriented economy. So these are economic models, right? So the economic model of US is to run twin deficits,
Yeah.
and force
More
other
consumption-driven,
exactly
yeah.
more consumption-driven, force other countries to invest in US in terms of bills and bonds. China, Vietnam, Japan, now India is trying to replicate it, are very export oriented economies where they try to realize economies of scale in their large numbers and try to do manufacturing at a cheaper rate, export everything, devalue their currency, and accumulate wealth. And that's their economic model, right? So India is trying to replicate that economic model, since I think India went through an economic crisis since 1994, 1992. They had an economic crisis, and they started changing their economy to a more open economy, right? So now India is trying to replicate the same model, but they have been having border conflicts. So though they are in the same BRICS framework, if an all-out trade war opens up, it is very likely that countries like China, Japan, Taiwan, Vietnam will pick United States, because their economic model and political model is dependent on US being successful.
Sure.
While China, Russia, Iran probably will look at decoupling from United States and trying to go on a path on their own, because they will view the US system as slightly more riskier. I mean, think about it this way: if I am a central bank governor, I have let's say $6.5 billion of reserves with me. My primary concern is, can I buy goods and services using this $6.5 billion? Will rest of the countries accept this $6.5 billion? And yesterday and last night, US Treasury rate, 10-year Treasury rates went up by 10 basis points. So which means we had $6.5 billion as of Friday, but that is not $6.5 billion by today. The value has dropped.
Absolutely.
Because interest rates went up. So the more riskier US becomes and more other countries sees US as a riskier destination, US interest rates will start gradually moving up. And the moment that starts happening, countries have to revalue their foreign exchange reserves and see how much is my reserve worth. Right? So those countries who sees risk will try to diversify their reserve portfolio. And countries like China will see, because China's exposure to the United States is huge.
I mean,
if
almost 500 billion.
Exactly, right? So, and I mean, during 2007 crisis, there was a discussion between Russia and China to dump all US securities, and that would have ended the US system, right? So they will try to reduce their risk. Rather than the personal clashes, if you remove that, if you look at it purely from an economics point of view, there is a risk. And I think US is trying to correct that risk. And they are communicating it in maybe in a different way, you know. I mean, in corporate world, we say, don't listen to the guy who's telling you sweet nothings. And listen to the guy who's telling you bitter truths, stuff that you don't want to hear, because that guy might be more aware of what is happening. So I think US is trying to tell the world something bitter, whether the world is willing to listen.
Sounds like Donald Trump. That leads into my last question. TJ, I'll put you on the spot.
Yeah.
You may decide not to answer this. If you were Donald Trump, how do you take this forward? What?
If I was Donald Trump, I will take the countries that offer me 0%. I will take Taiwan, I will take Vietnam, I will take Japan, I will take EU, I will take Peru, and I will say, okay, fine, let's do 0% trade. And I will tell my US companies to shift my manufacturing into these countries.
Right.
And those companies will automatically, you don't have to do
They'll
it
have
the
to,
moment
yeah.
you slap 100% on China and
There's
Vietnam
no-brainer.
0, it's a no-brainer,
Yeah.
right? So what that will do is it will significantly slow down the Chinese growth.
Sure.
And all of a sudden, there is no challenger to United States reserve currency status.
Yeah.
Because the entire business economic model of US is based on US currency being the reserve currency.
Yeah,
Right?
yeah.
And there is a challenger emerging. Right? If you
Now
slow
you're
down
neutralizing-
China,
yeah.
you neutralize. You have a reasonable amount of space to at least correct your position.
Understood.
If I was Donald Trump, that's what I would do. If I was Xi Jinping, I would welcome the change. I would look at US and think, hey, I'm running a little too much of a risk.
Yeah.
My entire reserve portfolio can get devalued at a very short time period if interest rates start
Get
moving
faster.
down.
I mean, with this process,
Yeah,
right?
from a Chinese point of view, they also have a trump. As I said earlier, they can just go to the markets and start
it,
selling US securities left, right, and center,
yeah.
and US interest rates will move up, and all the other countries will panic. I mean, Sri Lanka will panic. No, you only have $6.5 billion of reserves. You mark to market them, and if interest rates move up, and that 6.5 billion becomes 6 billion tomorrow,
Yeah.
it's not only an economic matter; it's a massive political matter, right? People are going to ask, "What's happening? Who invested in these things?"
Yeah.
Because we worked extremely hard to build that
Build that
6.5
reserve, yeah.
billion. It's sweat and blood and time,
Yeah.
right? And then an economic parameter moves somewhere, and the
Yeah.
value comes down. It's a lot of heartache.
That's a disaster.
Right. So there are trump cards to both sides.
Yeah.
But I am begging both countries to come to the negotiating table.
Leave the egos aside.
Leave the egos aside.
Yeah.
Realize that there are no winners and losers in this.
game, yeah.
Either all of us win together or all of us lose together. We've collectively pulled a lot of people out of poverty. Let's not reverse the good work we've done, and let's figure out a way to massage the problem and maybe move back into a system similar to Bretton Woods
system, yeah.
over 10-year, 15-year horizon, or move back into a model similar to Bitcoin or blockchain-based system over a period of time. I think answer lies in blockchain right now.
Yeah.
Where each transaction is accounted for and each block has an economic value. That can be the long-term way forward. But for all that, everyone has to come to the table to discuss.
Interesting, Thanushka. I think thank you very much for taking time and explaining and very in a simple form for all our followers and, unrattling this whole mess and the drama, but, in a more simplest manner. But while we were discussing, I think there were many topics came into my mind. I'm sure that I would like to extend this invitation for you for another discussion on the economics because I think it's a beautiful subject. We can talk for days. We can break it down into multiple topics also. Thank you, Thanushka, for joining JXG Spotlight.
You're welcome, Gamika. I'd love to come again.
Well, folks, that's a wrap for today. Very interesting discussion. We understood the context, why it has happened. I think, it's not just something happened overnight. It's historically built up. The balance, I think we spoke about equilibrium, demand, supply, manufacturing, consumption, a lot of things. I think, this demands for another discussion in explaining all that further better. So the world economy is running through a little bit of a challenge right now, but all hope is not over. There is hope, there's opportunity. As Thanushka rightly mentioned, in today's day and age, there's no I win, you lose. Either we lose altogether or we win altogether. At JXG also, we believe when we are stronger together, we are stronger than ever. So stay tuned for our next episode. Until then, thank you very much.